Welcome to Sip Strategize. This is our second event that we're having here at the Vault in Wyandotte. And the purpose of this entire event is just to inform buyers on what the current real estate market looks like in the Metro Detroit area and things that you can do to win in 2024 and 2025 based on the way that we see the market going currently. My name is Shane Atkinson. I'm currently associate broker with Good Company Realty. I've been in real estate for the last 6 years, 4 of which I was an agent. The 2 before that, I was an investor. And my aim is to guide first-time buyers and sellers through what that process looks like to make sure that they get the advantage and win in the marketplace. So oftentimes we hear of buyers maybe having an experience with an agent that they might not have good communication or they weren't aware of what the process is. And that really is my goal of this entire event, is to make sure that through each step of this, which is why we have our trusted partners, that they know exactly what to expect from each part of that home buying or selling process. So we're going to go over the home buying today. So thank you for being here. Sit back and let's get started.
Hi everyone, my name is Nikki Dauod. I am a loan officer with Best Interest Financial. I've been doing mortgages for 12 years now. Just 1 year alone, I helped over 300 families get into new homes. So definitely have a proven track record of helping everyone get into their dream home, and I'm happy to work with you guys as well. So a little bit about us. We are a broker. What makes us different than other retail lenders is we can actually shop your loan with 10 to 20 different lenders. That way we can make sure that you're in the best possible program and get the best possible payment, interest rate, closing costs, all that good stuff. So we want to make sure your best interest is first and foremost. So happy to work with you guys and give you a little bit more about the lending process today.
Hi, my name's Dan. I'm with Smith Insurance Group here in Allen Park, Michigan. We're in beautiful downriver. Smith Insurance Group has been specializing in helping people who are buying real estate, whether it's your first time purchase or it's maybe an investment property. Smith Insurance Group, we are an independent broker that specializes in shopping multiple carriers. We've been here in the southeastern Michigan for over 120 years, and it's my privilege to be here with Shane and Nikki, and thank you very much for having me.
Good evening, everyone. My name is Scott. I'm with Home Team Inspection Service. We are the home inspection company that works with Shane and his clients in the area. We bring the team approach to the industry. So as opposed to one inspector taking 3 to 4 hours, I have a team that takes around 90 minutes. Everything is done real time. Digital reports are emailed a few hours after the inspection. We handle any ancillary inspections that the clients need: radon, pool, well, septic, sewer scopes, etc. I am happy to be here and can't wait to discuss home inspections with everyone.
All right, so just to cover a couple different topics, as far as what the market looks like buying a home in 2020, 2024, and 2025, a couple different things, right? Often I get asked, what does it look like to actually get started with that home buying process? And the first thing obviously is to choose a real estate agent, somebody in your local area, somebody that you know, somebody that has a reputation that you trust. But past that, really your golden ticket in the door has to do with actually getting pre-approved for your mortgage. Because if you don't get pre-approved for your mortgage, there's no way to actually get in and make an offer on the property. You can tour houses all day, but without that golden ticket that's attached to that offer doesn't actually stand as anything. So my go-to and my trusted partner, Nikki, is the one who is fantastic at going through, finding what the client's needs are, and actually getting pre-approved. So Nikki, what does that process exactly look like if somebody comes to you the first time they're buying a house, and what are the steps that they need to take to actually get pre-approved?
Yeah, that's a great question. So what I always suggest is to start getting qualified before you even start looking. Because a lot of times clients will come to me and they might not be ready to buy right away, but it's always good to take a look at your financial situation. If we need to work on credit, if we need to work on saving some funds, we can set you up with a game plan so you are ready to purchase in the future. I mean, flip side too, if you talk to me and you are ready, we might be able to find you a great house right away and something that's your dream house. So it's always good to start earlier than you actually think. If you want to move by, let's say, June, don't wait until June or the month before June. I would say do it 4 or 5 months in advance. That way, in case anything does come up, you're well prepared.
Let me ask you though, oftentimes I get asked by clients, or I field phone calls and they say, like, what what does your credit score need to look like? And what are like the three different types of main loans that you guys offer, and what credit score is required for each one of those?
Yeah, so I mean, we work with credit scores as low as 500. We have a bunch of different programs. We do conventional, USDA, VA. So we have a bunch of different options, and we like to work with each client on their specific situation to see what we can get you qualified for. And what that's going to look like when you call me and we get you qualified, it takes just about 5-10 minutes. It's nothing too crazy. We look at your income, assets. We do a soft credit pull, so that way it doesn't hurt your credit until you actually are ready to purchase. But then you get that pre-approval letter, you're good to go. If you aren't for whatever reason, we're not going to just tell you you're denied. We're going to set you up with a good game plan on what you can do in the future. So we never tell anyone just no flat out, which is what the problems are with most other lenders. They'll just say, no, you don't qualify, have a good day.
Okay, but let me ask you, like, let's say that maybe there isn't a qualification. Do you guys have a game plan set in place to help buyers get to that pre-approval point so they can start touring properties?
Yes, we do. So we actually work with a credit specialist as well. So if your credit isn't where it needs to be, we'll have a credit specialist work with you to get there. If it's down payment that you need to save, we'll let you know exactly how much you need for that down payment to get qualified. Or if you need more income, can we get a co-signer? Can we get a gift? There's a bunch of different options that we'll go through to help you get to that pre-approval.
Okay, and last question. I know there's been some craziness lately in the market. I mean, everybody's been, waiting to see what rates do because we've been all over the place this year. What are rates currently sitting at, and where do you forecast it roughly see it going into the 2025 season?
Yeah, that's a great question. I mean, rates really depend on what kind of program that we're doing and the overall profile of the person. Right now, I mean, we do have some rates in the 5% depending on the profile. I would say average client is somewhere in the middle to higher 6%. Again, depending. However, rates are projected to go down in the next year or so. But again, we don't have a crystal ball. However, home prices are supposed to go up next year too. So it's all about finding that balance. Now is a great time to buy because interest rates are great, home prices are great. We want to buy before the home prices go up even higher. And I mean, the nice thing is what you want to do is focus on the house. If it's the right house, now's the time to buy because you're marrying the house. The interest rate you can break up with. You can refinance out of that. So that's not something that you have long term, the house is.
So would you recommend maybe finding a payment that somebody's comfortable with and then shopping a house in that price range?
Yes, I think that would be great. Telling me what your monthly payment goal is, I'll tell you what the price range you should be looking at for in that payment.
Perfect. Next question. So after we secure that asset and we get our pre-approval, then we start actually touring properties. And we find one that we like and we game plan on how we're going to actually put an offer in on that property. And in the actual pamphlet that I provided with you guys, there are steps. 1 through 12 is the long process of what that looks like. But I also include too a text that I like to send to my clients before we actually put an offer on the property. It's on that cell phone there. So I like to outline each point that you're actually going to be putting into that offer. Because you're going to get a 30-page document from me. It's gonna headline with that pre-approval from Nikki, and then you're going to get a text message that is going to outline a 30-page document. And what that essentially does is let you know exactly what you're signing for, right? I don't want anybody to be like, oh, I have to DocuSign this long document and I have no idea what any of these signatures mean. I like to actually give an outline of what that strategy looks like that we're actually sending to the seller. And then on your behalf, I actually like to write a nice email that goes along with that offer that actually puts a face behind the name, not physically, but through writing and through an email to actually outline what that buyer looks like and how much this home would mean to them to get the approval from that. So that's one thing that's really important to me is humanizing your offer. Anybody can look at a page on a screen, but actually putting the person first and not just that offer, I think is really important to getting an offer accepted. And that's a strategy that I often use to make sure that my offers stand out when submitting to a seller. So after we submit our offer and we get that accepted from the seller, then we would go through and we schedule our home inspection. What I like to tell people is this. There's 3 times that money is going to come out of your bank account in the process. The first time is when you get your offer accepted and you put your down payment, which is called your EMD. And that EMD gets applied to your closing costs. That's like your down payment on your closing costs. The second time money's going to come out is your private inspection. And that's the money that you spend to make sure that the asset that you're buying isn't going to be something that's going to run you a ton of cash in the future. You're doing your due diligence to make sure that the home that you're buying is a nice home. So my number one recommendation for home inspection obviously is Scott with Home Team of Warren. And Scott, I have a couple questions for you. Bringing this back to the last time that money's going to come out of your bank account in the home buying process is the appraisal after your inspection, and that's when the bank comes out and makes sure that the home is worth what you offered on it. So, Scott, I know we've worked together on, it has to be between 20 and 30, maybe 40 houses by now. What's the number one thing that you tell buyers to prepare for going into a home inspection?
So you're buying a home. No home is perfect. Old construction, new construction. So you have to have that mindset that when we go through the property, we are going to find issues. And these issues are all correctable. That's the number one mindset that you need to have going into the home inspection.
Now, you say that they are correctable issues, but let me ask you, is that just on a home that's already built, or is that new construction and pre-existing homes?
That's on everything. New construction, pre-existing, anything will have an issue sooner or later. And it's good to find the issue sooner than later.
And you had a question, Cody?
Yeah, I don't know which one of you would be best for the question, but probably you. If you have, I've heard nightmare stories about after closing you finding issues on your house. Is that more of a warranty thing? Is that an inspection person help? Like, how does that, I guess, responsibility fall if I'm not a buyer?
So that's a great question, and that's something that needs to be discussed again prior to the home inspection, is that a home inspection is a snapshot in time of the property at that day and time of the inspection. So there are issues that do arise after the inspection. Sometimes it will be covered under the home inspection, and sometimes it will not.
Thank you.
Yes.
It says offer accepted, so you put your money down again?
Yeah, once they accept the offer, so yep, you get 5 days to put your money down. And what that does is they put that in a holding. It's a holding account. And yeah, your earnest money deposit. Yep, your EMD. And that money's actually safe because we hold it with the brokerage for your agent, your buyer's agent. So if I was representing you, my company would be holding that in an escrow account. And then if your inspection fails, if your home doesn't appraise, or if for some reason you get to underwriting and you wouldn't qualify for financing, you actually get that money back. But if you decide like, oh, I bought a blue house, I can't live with a blue house, not my color, then they could try to keep that money. But luckily in Michigan, we have pretty good laws that protect buyers to make sure that their earnest money deposit that they hold.
Reason, it can't be just something you just came up with, like, I don't want to talk about.
Right, yeah. Yeah, that would be like, Scott, like if we found like a major issue, then that would be something that we could turn back on the seller and say, hey, we found like a sewer line collapsed. We want to, remove ourselves. Exactly. And Scott, like that's a good segue question too. Like, what would you say like the 3 biggest things that you'd find in a home inspection that maybe wouldn't be something that a first-time buyer would want to take on?
Foundational issues.
Okay.
Foundation issues, whether if it's a bowl in the wall, sewer issues, that's a very expensive fix. So that's why we recommend you always have a sewer scope for any homes that are from 1970 and older. Mold is typically very easily mitigated, so that is not a deal killer. It's scary, but it's correctable. So if we can see visible signs that there has been water in the basement, whether the sump pump failed or the sewer line clogged, we would point that out to you, but that's something that can be unseen. So areas where it can be issues, the Hazel Park, the Royal Oaks, the Detroits, then yes, we take a very good look at the basement to see if there's been signs of flooding. But again, that's something that if it's not seen. So we don't tell you whether to buy the home or not buy the home. We just show you the status of the home that day.
So it depends on the severity of the issue too, and that's something that we can actually take back. So after you have your home inspection with Scott, then we can go back and say, hey, we found these issues with it. And then you and I would discuss and what we'd say, this is a two-prong outlet. We can live with that, not the big deal. But if we found like a crack in the foundation, we would ask the seller then, hey, is this something that you'd put money to fix? And if they tell us no, then we could either exit and get our money back for our deposit or have the seller agree to fix the issue before moving forward. Oh, yeah. Oh, we can come back with a rebuttal. But one thing too, I'll tell you, after having an inspection, I always make sure that there's a couple different things that I add to my home insurance, because you can have an inspection, but you could also, every home is going to have a problem at some point. Just the nature of things. Every car is going to have a problem. Every home is going to have a problem. It's just the nature of things deteriorate over time. But number one, I always go to is I fall back on Dan to find out, based off a home's condition, what I think that they should use as their home insurance or specific riders. So Dan, I trust with, he has my insurance, my parents' insurance, my girlfriend's insurance, my friend's insurance. Dan has insurance literally for like my entire circle of people that I communicate with. Dan, what are some of the things that like a first-time buyer should look for to make sure that they're covered with their policy that is going to be advantageous for them but won't break the bank, but is going to look out for them long-term to make sure that if they do run into an issue on this home, that it's not going to break the bank as they're building equity in it?
Good question. So if you're a first-time home buyer, some of the things, first of all, I want you to use an independent insurance agent, whether that's me. Of course, I obviously would like you to use me, and I welcome that. But any independent insurance carrier is what I welcome. Buying insurance online, sometimes you don't know what you don't know. So when you go online and you think this simple way of like, I'm just going to get a home insurance quote online and plug in some numbers and, oh, this looks good, and here we go, and I give it off to Nikki, and oh, that's great. But we don't know what we bought. Every insurance policy is different. Lots of different coverages go into a homeowner's policy. They're not all created equal. They're very different. Every policy you buy is going to be different. Depends on the carrier, depends on what endorsements you added. It's very different. To protect first-time home buyers, like for example with Smith Insurance Group, when a policy walks out our door, we automatically include water sewer backup, which we were just talking about, which happens in the basement a lot here in the southeastern Michigan. Every policy that walks out their door, we're a minimum of $5,000 in coverage. And then if the basement's finished, we're actually adding coverages on. So that's huge. That's important because water backup and sewer is excluded from a homeowner's policy. You have to add that coverage back on. So we add that on every policy that walks out our door. Also, to protect the service line that we were talking about earlier, unfortunately, a lot of older homes in our area, the service line, which is buried utilities. So in our area, like for Wyandotte, for example, that's going to be your sewer line, your gas line, your water line. Those are buried utilities. For a very small amount, and usually it's about $20 per year, you can add coverage on that will cover anywhere from $10,000 to $20,000 in coverage that will cover buried utilities. So what happens a lot in this downriver community in southeastern Michigan is our buried utilities like the sewer line will collapse. And it's a very easy fix. It's unfortunately a very expensive fix. But you can add on that coverage onto your homeowner's policy for very cheap that will cover you in the event that your sewer line does collapse, you got tree roots, etc. So any first-time home buyer, which we do a lot here at Smith Insurance Group, is we're adding that water sewer backup to protect the basement, and we're adding that service line coverage again on the policy going out. And again, another thing to add is replacement cost policy is very important on a policy. And when you buy online, sometimes they will do ACV, which is actual cash value. And I don't want to bore you on the details because not a lot of people want to sit around and talk about insurance. But replacement cost is so important. So make sure when you're purchasing a homeowner's insurance policy, it's an actual replacement cost policy and not an actual cash value.
How do you stay competitive with your agency versus other carriers in the area? Because just like real estate agents, just like mortgage brokers, I mean, we have a lot of independent agents that are around. But, the thing that I think working with you is that you take the extra time to really find out, what people's actual needs are and the product that they're buying. So what's one thing that's important to you about evaluating a client to recommend a certain policy to them? And how do you stay competitive versus other people?
Good question. So to touch on the last part there, our agency is a little different than most. We've been around 120 years. The thing that I think is a common misconception between independent agencies, because a lot of people will say now is I'm an independent insurance agent. Every independent agency is different. It depends on who you're appointed with and the carriers we represent. So with our agency at Smith Insurance Group, we represent the clients, not the insurance carrier. So we've spent 120 years in the southeastern Michigan area acquiring carriers that have gone the distance with clients. So they're not fly-by-night insurance carriers you never heard of, but they may not be spending billions of dollars in Super Bowl ads that you see on TV. They're carriers that have been here for over 100 years. You might not see them all the time, but they're carriers that we've had for over 50 years in our agency that take care of our clients. So I think what separates us a little bit differently during our discovery process, when we, after you found the great house for them, Shane, and they've come to Nikki and got their pre-approval, they come to me and we sit down and we talk about their policy and things that are important to them. And a lot of times this is their first purchase, their most expensive purchase they're ever going to make in their life. We want to make sure they're covered, and we want to make sure the deductibles are right. Unfortunately, there's a lot of insurance agents out there that will, the price might be low, but the deductible is so unattainable. If they do have a claim, they would never be able to pay the deductible to take care of their house. So we make sure with first-time home buyers, the deductible is reasonable, the coverage is right, and we go through their needs and any endorsement that we might need. So,
Perfect. Yes.
I've heard about the houses that are like $100 or $1,000 before, like you have to fix them up and stuff.
Mm-hmm.
Like, could you use this stuff for that, or like you don't at all?
I mean, it depends on the actual situation with the house. Sometimes they're like through the bank, and you'd have to put your bid into the bank to see if they accept the bid or not. That was a little bit more prevalent before when there was less competition, but I think there is a lot of investors out there now too. Not saying it's not still a thing. You definitely can buy a house like, that's a bank foreclosure, but they're a little bit more far and in between than they were, 5-10 years ago.
If we were to buy a house like that, we probably, if it's $1,000 house, you're saying it doesn't pass or fail, right? It's just up to me to buy it, like on the inspector side. So it'd be like, is it hard to insure certain homes?
good question. So no, it's not. It depends on the carrier. We are in one of the hardest insurance markets in 50 years. I will say that. However, when you're with an experienced independent agency like our agency, Smith Insurance Group, we have so many carriers. So might be some underwriting guidelines that might not fit one carrier, but we have plenty of carriers that might. So if, for instance, a lot of issues right now is, let's say for roof, for example, if you purchase a home and there's a lot of overgrowth over top of the roof, like trees are hanging over, one carrier might use satellite imagery and decline your application. But there's other carriers that realize that you will address the issue once you buy it, and they'll be happy to take your policy. So again, it goes back to making sure you have an experienced insurance agent, and obviously with Smith Insurance Group, we hope to help you out.
To go off that too, as far as the loan programs go, there are loan programs that you can buy a house and you can actually take out some more money to fix up the house and make it what you need to. So if it needs, a new kitchen, or if it needs new flooring, things like that, there are programs for that too.
And is that an FHA 203K?
That is one of them, but there's others as well.
Okay. So bring it back then to, we've got our pre-approval, we put our offer in, and we've got it accepted by the seller. We've went through a successful home inspection with Scott. We've went through and we got an insurance policy through Dan with Dan Smith, or through Smith Insurance. And now we get to the point to where we would have the bank come out and do an appraisal of the property. And Nikki, in like 2 to 3 sentences, can you explain what an appraisal is and what something like that would cost?
Yeah, appraisal costs are usually between $500 to $700, depending on the area, the size of the house. What the appraiser does is come out to the house and they look at comparable homes in the area and they tell you how much your house is worth with the other comparable homes that sold recently, and then it gives you a value. So that's the value that we go by, either that or the price you agreed on, whatever's lower.
So if the appraisal, the bank that you work with, they send out somebody independent, correct?
Correct, yes.
So it's a third party to make sure that what you're buying is actually worth what the offer is.
Correct.
So let's just pretend here that the appraisal is higher than what the home price. What does that look like?
That's great for you because then you have automatic equity in the house. So that's
Does the seller get to know
helpful.
that?
No, the seller just has to know, hey, it appraised. We don't tell them it's higher. That's our own little secret. Yes, so good question. If it appraises lower, that's when I would let Shane know, and he would go back to the listing agent and say, hey, we offered 100,000, it came back at 90,000. This is what the home's worth, let's renegotiate. So what that can look like is they could come down to that 90,000 that it appraised at, or the seller might say, no, I'm not budging, or split the difference. If the seller doesn't budge, that would be on you as the buyer to make up the difference. We have seen some sellers that, hey, we'll split the difference. You bring 5,000, we'll bring 5,000. Or some that come down the full amount.
So if they don't, though, you do get your deposit back, correct?
Yes, correct. If for some reason it came back low, the seller doesn't want to budge, you don't want to bring the extra amount, you'll get that earnest money deposit back.
So let's just say that we made a really good offer and it does appraise now. Then the next process that we'd move to, we're getting towards the end probably. This is after the appraisal, you're probably looking at less than 10 days to close, correct?
Yes, appraisal means we're at the home stretch.
Okay. So after the appraisal, we're going into like underwriting, correct?
Well, underwriting we're doing while the appraisal happens as well, so everything happens at the same time. Once the appraisal's back, if we need any other additional documents, updated pay stubs or bank statements, which we've been getting throughout the whole process, we'll get those last final documents and be ready for closing.
So are you doing like a verification of like employment, or just you're basically making sure like the client's financials, like their pay stubs and their credit score matches at the end of that 30-day transaction as it did in the beginning, right?
Correct, yes. We are calling your employer, making sure you're still employed, making sure you're not changing jobs. You still have the same money that you need for closing in the bank. Just kind of all the last minute checks.
Okay.
Yeah. Don't open up any new debt while you're buying a house. Nothing like that. We've seen that.
So I have one more question too from Dan, and then I'm going to move into a few rapid fire questions for each one of you. So at the end, are you guys sending in that final insurance quote to the bank for them to verify the finalization of the loan?
Yeah, so after we have we've done the quoting process and the insured is ready to purchase and Nikki's approved it, Nikki will send that to clear to close, and yeah, we'll take care of all the, once you agree to the policy, we'll have some signatures, and then part of, most likely if it's your first time home, it'll be part of your escrow, and the closing costs will incorporate your first year purchase of your homeowner's insurance.
Perfect. Okay. We've got our insurance policy finalized. We're in underwriting, and then we're clear to close. We're at closing day then, right?
Yeah, closing day.
So what is something that's important to you about going over that final review with your client?
Yes.
Because they're going to get two things, right? They're going to get what their monthly payment's going to be, and then they're going to get what their closing cost is, right?
Correct, yes. So what we'll do at the very end, before closing day, is you'll get your final numbers, what you actually have to bring out of pocket to closing, the rest of your closing costs, and what your actual monthly payment will be. So that will go over before you get to the closing table, so you know what to expect. That way, if there's anything out of line, we can discuss that before you're there and actually have to sign everything.
And then we have our closing day, which is
Yes.
everybody's happy. We're signing documents. We're at the title company, high-fiving, having a great time.
Yes. Yeah.
Okay. Couple quick rapid fires for you too. So, Nikki, with being in the business as long as you've been in, let me ask you, what's the longest you've ever seen a transaction take?
Longest?
Longest.
I would say 90 to 120 days was the absolute longest, but that was in New York, not in Michigan,
Okay.
to be fair.
Weird situation.
No, it just takes very long in New York, co-ops, fun stuff.
Understandable.
In Michigan, I would say it was about 70 days, and that was USDA. It was during COVID, so everything was backed up, so.
But generally, we're within like 30 to 45 days.
Oh, yeah, generally.
Like 95% of the time.
Oh, yeah. Fastest, we were able to close a loan in 10 days.
Wow.
Yeah, so it can happen.
Dan, have you ever seen a home that's uninsurable? I can help you out there.
Okay. Sorry about that. Yes, we have. If the market value of the home is less than 70% of the replacement cost, it would be uninsurable by most carriers. There's always a loophole, though. There's always a carrier that will take it. You may not want to pay the price and the coverage, but we can make it. We could actually get that deal done if we had to.
Scott, what is the craziest thing that you've ever seen inspecting a home?
Craziest thing inspecting a home. Hidden rooms. We've walked into basements and there's been hidden rooms and there's been some weird things inside those rooms.
Was anybody inside the hidden room?
No. Thank God.
Have you ever been attacked on a home inspection?
I've been chased out of crawl spaces by feral cats, and I've had tenants pull guns on us.
Oh my God. Whoa. Obviously, you're alive.
That's why I have a team. That's why I'm never alone.
Awesome. Well, thank you guys so much. I just want to take any last questions that you guys may have before we break out and enjoy the drinks and snacks that we have here. Are there any additional questions as far as that home buying process looks like?
What happens if the house appraises under and the buyer isn't willing to, or the seller isn't willing to come down on the price, and there's no wiggle room there? Like there's like this, the buyer can't make that purchase, like can't go that high. What happens then?
So we would do our absolute best to go back and renegotiate that. And that, generally on our contracts, we have like a 3 to 5 day contingency where we can negotiate with the seller to try to get them to come down in price. And, some of the time there is too. And it depends, right? Let's say that we asked for something to be fixed on the home inspection and they agreed to do that, but then the appraisal's lower. We could maybe go back on that inspection and say, you know what, you don't have to fix the roof anymore. We'll take it as is, but will you come down $10,000? That's an option. There could be an option where, maybe through the mortgage company that there is, an FHA 203K, which will give money to actually, fix that if we found that in a home inspection. There's different ways to do it, but the majority of the time we are able to negotiate. But I do like to give people a peace of mind to know that, even though the appraisal may come in low, if the seller's not willing to, you're still not out that whole EMD deposit. But that's where like hiring a strong agent comes in and making sure that they can negotiate and properly relay that, hey, we may have offered $200,000 and we didn't have any appraisal guarantee included in our offer. Like, I'm sorry, your house isn't worth 200, it's worth 190. Like that's just the bottom line. And, you may disagree with that, but at the end of the day, that was a third party that came out and evaluated that property.
And sometimes, because I actually bought my first house and I did appraisal and it didn't cause any problems, because if you're not doing a minimum down payment, I found out that it doesn't mess up the loan. So like the gaps there, like you just have a weird, what they call like value to loan or something. I think
Loan to value. Very close.
Yeah. So as long as that's within the threshold, it doesn't even matter if you appraise low, you can just do it anyway. So it's more or less, as long as you're above that minimum thing.
Correct.
Fine. So it can just throw off some ratios, but it's still close. That's what I was able to do. So sometimes it causes no problem at all, even with the low appraisal.
Interesting. Do we have any other questions? Perfect. I just want to thank you guys all again for attending. We like to keep these events small and intimate, that way we're able to, address any concerns or questions that you may have. And we also through our this link right here, if you guys do scan this with your QR code, these are links that you guys connect with us personally, and we have options after the event's over. If you want to schedule some time one-on-one to go over your personal situations to see what that would look like to work together, or go over your timeline, or even a game plan, we'd be happy to do that with you. But thank you again for your time. Thank you to our panelists for stopping us up and giving us some of your knowledge on the fields that you guys are experts in. And until the next one, thank you so much.